Good afternoon, dear plus one commerce students. Here there is a class of accountancy. Just now I have put one short video about the meaning of accountancy. Dear students, what do you mean by accountancy? Accounting is an art of recording business transactions in a set of book. For example, buying and selling activities. In buying and selling activities, purchased goods on credit, selling activities, sold goods for cash, cash sales, like that. Okay, students. Then accounting equation. Now we want to know about the accounting equation. Accounting equation is nothing but capital is equal to assets minus liabilities. So what do you mean by capital? Capital is the first and foremost amount to be brought by a businessman for starting a business. Then assets are the value of resources which owned in the business. Then liabilities are the amount to be paid to outsiders after borrowing. These are the accounting equations. Next, we want to know about revenue. Revenue is the total earnings in the business. Revenue is the total earnings in the business. See, now we want to know about the three kinds of accounts to be studied in plus one accountancy. There are three kinds of accounts. So first one is real account, and second one is personal account, third one is nominal account. What is real account? First of all, I can tell you about the meaning of real, personal, nominal accounts. Real account is an account which is closely related to the assets of the business. Personal account is an account which is closely related to persons or companies. Then nominal account is an account which is closely related to business incomes, expense, loss, gains, etc. Okay, children, these are the three kinds of accounts to be noted. Real account is related with the assets of the business. Personal account is related with the persons or companies. Nominal account is related with the expense, incomes, loss, gains, etc. See, what are the rules for these accounts? So, only three kinds of accounts are there. Only three kinds of accounts are there in accounting: real, personal, and nominal. See, in order to do accounting work, we need a rule of each one. What is the rule of real account? Real account is the real account rule, that is debit what comes in, credit what goes out. Then a personal account, debit to the receiver and credit to the giver. The nominal account, debit to the loss and expense and credit to the incomes or gains. Based on these three rules, we mainly prepare account books of a business organization. Okay, students. Then I just tell you about the journal entries. For example, Mr. Anil, who started a business recently with rupees 1 lakh. What is the journal entry? Cash account debited to Anil's capital account. Next, purchased goods on credit from Bakker and Company. Purchase account debited to Bakker. Here Bakker account should be credited because we didn't pay money to Bakker after taking goods from him. So next transaction, paid cash to Bakker. So we are paying cash from our business. So our cash balance will come down. So we have to write journal entry, Bakker account debited to cash. Say paid salary or any other expense, journal entry will be salary or expense account debited to cash. When we pay any amount from business, that should be debited. At the same time, cash to be credited. Isn't it, students? See, now we have discussed about this. See, in order to keep account book of an organization, first of all, we have to make a record. First of all, we should follow journal entries as its the first step. Journal is the original record of business transaction. Next, ledger account, second step. The second step of preparing ledger account of a business, recording transaction is called a ledger account. The second step for preparing account book of a businessman is called a ledger account. Third, trial balance. Fourth, trading profit and loss account. And fifth, balance sheet. These are the procedure of preparing account books of a businessman. Say first step journal, second step ledger, third step trial balance, fourth step trading profit and loss and balance sheet. Okay.